Hong Kong versus Singapore. Bloomberg Intelligence is doing a lot of work for us and really been working hard on this report that just came out here and really crunching the numbers. And where does this race go, right? Who wins? Well, they're saying, the race to become Asia's top business and finance hub may almost be over. The latest report found that while Hong Kong cemented its position as China's financial center, Singapore is still also the preferred site for international business offices.
Yeah, something, as you said, we talk about a lot, really, that rivalry. But let's get more on it now. Bring in two of analysts who worked on that report. Joining us is Diversified Financial Senior Analyst Sharnie Wong and then Asia Real Estate Research Analyst Patrick Wong. So, Patrick, let's start with you because this latest report here, it discusses the outlook for office real estate in both of these cities. So just talk us, how do they compare Singapore, Hong Kong?
Yes, if we look at the situation now, right, Hong Kong definitely is more relying on China, mainland China, and that makes the things more interesting because we see the divergence of that, and basically we see more volatility, right, for Hong Kong situation. For the property price, we see the a lot of collapse. Basically, it's come down quite a bit for the housing prices by 25% over the past 2 years, right? And then we see the Singapore looks like more resilient in the sense that we see the broad-based demand from the office, and also we see the really resilient prices, office rents, etc. So it makes the situation quite different for now.
What about housing rents? I know rents have gone up here in Hong Kong, but I mean, Singapore has just been nuts since the pandemic really happened. I mean, can Hong Kong catch up then in that way? What are you seeing there?
Yeah, I think the Hong Kong government, they did quite a bit of work to attract more talents coming to Hong Kong. And like the top talent pass scheme last year, we see like more and more people, we see basically for different types of schemes, we have 90,000 of talents working here now, right? It's much more than before. And basically, we see the situation in Singapore, the rents is come up quite a lot over the past 2 years. And then it starts showing the rents coming down a bit in fourth quarter last year. So for Hong Kong last year, we see the rents up 7%. We see the trend may be sustainable this year as well. So it attract more talents coming in, and then the vacancy rate coming down. So it's supporting the overall housing market here.
Rents might have gone up, but house prices or home prices have been a pretty different story, really. We've seen a lot of weakness in them. So do you see it possible for Hong Kong to reverse that decline?
Yeah, looking forward to the budget speech next Wednesday, right? That's very important.
Measures,
yeah, and that is the tightening that affecting the Hong Kong market quite a bit. And we see the easing a little bit in the policy address in October last year, but the impact is not very significant. So possibly we see the government may relax a bit more, right, in basically next Wednesday, and then to attract more demand coming in to support the market. So hopefully the prices, we may see the price may still coming down a bit at this point, but going to like second half this year, especially if the interest rate is stabilizing, coming down a bit, that will also support the overall situation.
Okay, that's the property side of things. So maybe, the debate's out there, but with wealth management, Sharnie, you can chime in a little bit more. I mean, during the pandemic, we basically saw when it comes to family offices that are opening up in Singapore, a lot of mainland wealth heading to Lion City. Can Singapore still maintain that lead in family offices?
Yes, actually, Singapore grew a lot faster, but it was very small to start with, right, relative to Hong Kong. So we do think it's going to take a very long time for Singapore to actually catch up to Hong Kong. Going forward, we think the outlook for Hong Kong is actually improving. And as you mentioned, there's a China factor. There's a lot of people that are, coming to Hong Kong. There's a top talent pass scheme. So all these factors, and the fact that, just the population, if you think about China, the people with over $100,000 in wealth, it's the biggest in the world. There's more people in the upper high net worth segment, in the mass affluent segment, that's going to really drive the AUM growth in Hong Kong. So even if we, pretty conservatively assume that both of these wealth centres will grow at around 7 to 8% going forward, it will still take about 17 years for Singapore to catch up to Hong Kong on the wealth side.
Where Hong Kong has really suffered, though, is the IPO market, because this used to be one of the biggest places to attract new listings, and we've just seen that totally falling off a cliff. So do you see that changing at all?
Yes, I do. But actually, I'd like to caveat that with, saying that Singapore, they've actually lost listings over the past decade. From over 770 10 years ago to around 640 right now. So, Singapore hasn't been doing very well in cash equities, and it's likely going to be the case. Whereas Hong Kong, they are suffering from the slump, with the China stock market definitely affecting the IPO outlook. But when we see what the regulator's actually doing in China, they want to slow the pipeline of IPOs onshore because they want to support the secondary market. So this is actually pushing all these companies to seek alternative ways to raise capital. And a good way would be in Hong Kong. And right now, Chinese regulators, they are picking up the pace of approvals. So we have seen that go up. And I think in terms of timing, there is a risk. Our forecast is for IPOs to rebound to 20 billion this year. So again, that will hinge on stock market sentiment. But I think, this rebound, it will happen. It's just a big question of when.
We talked a little more about family offices. What about wealth management in terms of what Hong Kong can still do to catch up?
Yeah, so on the family office side, Singapore, they have definitely tightened, with the money laundering scandal, and basically the smaller size family office ballooned a lot in Singapore. So the regulators are definitely, slamming the brakes there. Hong Kong, on the other hand, different. They want to accelerate this push. And when we look at the recent changes, such as the tax incentives they've introduced for large family offices that have over 240 Hong Kong dollars of AUM, the tax is actually better. So I think that's going to entice some of these family offices to set up base in Hong Kong. Also, the approval process. In Singapore, you need MAS approval. In Hong Kong, there's no approval. Yeah, so I think that's also going to help. And then also the government, they're launching the Capital Investment Entrance Scheme. So that's expected to kick off by the middle of this year. So again, for Hong Kong, there's, all these growth drivers, that the government and regulators are clearly slamming,
pushing.
Yeah, pushing ahead, yeah.
All right, you're calling it a deep dive, Singapore or Hong Kong, and you're saying there's no contest. In fact, both can win the hub race.
Winners.
Yeah, all right, win-win situation. But that was our Bloomberg Intelligence senior analyst, Sharnie Wong, and also Patrick Wong joining us this morning. And Bloomberg users can find the full BI report on the terminal. That's at BI Go.